what we have here, this is Wednesday, trade after trade after trade after trade after trade. And what do we have to show? Loss after loss after loss after loss. Now, you might be wondering, how did we get here? And it's very simple. I did not follow my rules. So I'm going to go through a quick breakdown of what the model is so that you can at least have an idea of what the consistency looks like. So this is going to be a full breakdown of what it would look like on each of the day. I think each day should give an idea of what it can be, right? Perfect. We're going to be starting with Monday. So on Monday, we have a news at 10 a.m. Whenever we have a news at 10 a.m., we skip the morning session and go into the afternoon session. Let's take a look on Monday. So the ruling is just the news at 10 a.m. There is no news in the 8:30, 8:15 thereabout. So the pre-session is off the table. And having a news at 10 a.m. would typically have the market behave pretty choppy. So you'd want to avoid it. There's some days in which you'd run normally, but you're looking to have more of a consistent look. So we're looking at the afternoon session. The afternoon session is 1:30 p.m. New York Standard Times, and it ends at 4 p.m. So this is the afternoon session, and we're looking at what has happened prior to the afternoon session in order to form a bias. So right here in the morning session, we have relative equal lows created, and then in the lunch session, which is from 12 to 1:30, we have a swing low created here, which would be the lunch hour low, and then the lunch hour high was already taken out. So the market is running higher. The lunch hour high has already been taken out. So at this skill zone, I would be anticipating a reversal. Now, when it comes to reversals, we know that we use the last dance as our entry mechanism. Now, market opens at 1:30. This would be the last FVG prior, but if you realize it failed to actually close below it here, offering that reversal into the lunch low. So we look to see if another opportunity is presented. And here is the last FVG prior to the reversal, and this was offered at the 2 a.m. kill zone, which is from the 1:50 a.m. macro. Now, if you realize that the market never retraced into this last dance FVG, instead it retraced into this FVG, but given our entry model, we would have missed out on this trade. Another thing that can be done is that we want to look at opportunities on different time frames. So if it's the case where one particular time frame does not offer that retracement, you can check on the 2 and 3 minutes chart to see if it would allow for that retracement. The last FVG prior to the reversal, in this case, similarly would be an FVG around here. So this would be one of the days, because we actually got a full-on reversal, this would be one of the days where no trade is taken, because we wouldn't have gotten a fill. Now let's move on to Tuesday. Of course, first things first, you want to look at the calendar. So there is no news at 8:30, and it's just a medium impact news at 10 a.m. So given that circumstance, you can go into the market looking for a trade as early as 9:30 a.m. So let's go ahead and have this chart highlighted here. and we're going to Tuesday at 9:30 a.m. All right, so you want to mark out 9:30 a.m., which represents the opening, and you want to mark out the previous session's potential targets. It's going to be for the London session, which is between 2 a.m. and 5 a.m. You want to mark the highest high and the lowest low within that area. So you can see here, the London high was taken pretty early on. I believe ICT did a video on this particular trade. I was not aware that, because it's an FOMC week, he went in extremely early to look for opportunities. The pre-session is always indicated by him. That's going to be 8:30. So I wouldn't have known to look for a trade opportunity within that 5:50 to 6 p.m. macro, which would have presented a standard entry using our model here. But on my end, I was not looking for an extremely early entry. Instead, I would be looking at the 9:30 a.m. Let's remove this. All right, so we're going to be looking at the, so that's already been run through, 9:30 a.m. All right, so what happens? The market opens. The London high is already taken, so the initial bias is that the market would more than likely seek to run lower. The market opens, run above buy side liquidity, trades lower. If you realize that the only retracement it gave was into this FEG here, so there wouldn't have been an opportunity to participate using the last dance FEG that would have been presented here. Now, as the market trade down into London's low, the entire London range would have been cleared on the sell side. So then I'll be looking for a reversal. Now, what is the last FEG prior to the reversal? It would have been here. This would have been the FEG. So the minute the market breaks and close above it, there would have been an entry here, and another opportunity here to take price higher. So far, so good, right? If you pay attention here, I would have taken a trade here. The rules, right? Because I should not be looking in the pre-session, which is in the 8:30 period, because there isn't any real news driver in that period, which means that it's likely that the market can just go sideways or just behave really choppily. Let's look at the fated day, which is Wednesday. Now let's look at the calendar. So here for Wednesday, we know that we have news at 8:15 and 10 a.m. So we know that the morning session is out of the question because it's not going to provide really good trading opportunities. So you want to look into the pre-session because we have a news driver here at 8:15 a.m. Now let's go ahead and take a look. Now we're here at 8:15 a.m. The market has been running higher since the session. It's a premium, and with the 8:15 a.m. there's a displacement lower. This last dance FEG was created right here. So last FEG prior to the reversal. Now, when I was looking at this trade, I had the FEG here. I had my entry here. So with this retracement here, on the contrary, I thought that I pretty much set up my stop loss too late. So I missed this fill, which would have been right here. And I also missed the fill because I had my entry around here. So it barely missed the fill. The market sold off. No. I went into the morning session breaking the rule. So I took a loss here, here, there, there, there. And keep in mind, the risk to reward ratio that I'm running, the drawdown ratio that I'm running, is a single trade drawdown per day. And what we see here is 1, 2, 3, 4, 4 trades already. When you look into the afternoon session, another trade here. Now on a day like this, the afternoon session is a valid opportunity to participate, because the morning session would have been, there would have been anticipation for heavy manipulation in the morning session, so it would have been alright for you to look in the afternoon session. So let's go ahead and take a look. So we have the afternoon session. We have lunch hour between 12 and 1:30 a.m. The low was there, and the high was taken out early on once the market opened right here. So seeing where we have this area left, which is a relative equal low on the lunch hour low, the market is going into premium. I am anticipating a reversal. Now, if 130 fails, the next official kill zone would be at 3 p.m. Now, once this has taken place, the market breaks down lower, rallies back higher. This would be the last FEG prior to the reversal. The market broke, closed below it, ran lower, and then retraced back up, closing above it. So I would have been triggered out of the trade if I was following the normal procedure. It seems for this day it was one of those it's the like the end of the day run where the opportunity doesn't present itself at 3, but instead it presented in the last 20 minutes macro of the day, which is from 350 to 410. Right, what happens? The market breaks lower, last FEG prior to the reversal. So it's the last dance. Market breaks, goes below it, trades back up into it, and runs and takes out the lunch hour low, and also run and take out the lunch hour low, and it is continuing to go lower before the session eventually closed. So that's pretty much it. So know that this would more than definitely break the 5% rule in regards to how much drawdown you're allowed to have per day. So we're going to be resetting and starting back from scratch. So we're looking to pass phase 1 and phase 2. See you in the journey. Take care. That's the entry.